Welcome to a message from Legacy Financial. Mike Mazel, and I'm sitting here with Robbie Kuhnheim, our Director of Investments. Today we're going to take on the topic of market volatility, a very apropos topic today here in the middle of 2020. Let's talk for a minute about that. Market volatility, Robbie, what does that mean to you?
It is a hot topic right now because we're in the midst of a very volatile year. I'm sure clients are very familiar with that. We saw stocks really whipsaw through the year, went down significantly. They shot back up sharply. So volatility is just the general movement in stocks. And we've seen extreme bouts like this year, like 08, 09, the Great Depression. But volatility is always inherent in stocks, maybe not to the extremes that we've seen this year, but volatility is always there. There's always some concern. There's always something going on. But over time, stocks generally move upward. If you look at the last 40 years of stock returns, 30 out of the 40 years, the calendar year return was positive. We had some positive stock returns. But the average drawdown or the average intra-year decline was close to 14%.
So describe an intra-year decline and the difference of that versus a calendar year return for people.
So, excuse me, calendar year return, we're just looking at what was the beginning value, what was the ending value, what's the difference there in percentage terms. That's your calendar year return. Intra-year declines, though, when we're looking at that, it's how far down did the stock market move within the year. So if you look at year to date so far this year, it's about 34%. However, if you look at returns right now, and who knows where it ends up by the end of the year, there's no crystal ball that can give us that answer. But right now, you have the S&P 500 within about 5% of its all-time high. The NASDAQ now within about 1% of its all-time high as we speak. So again, the intra-year decline is very different from looking at calendar year declines.
Talk to me for a minute about staying invested and the importance of that during the volatility of the markets.
Yeah, I know it's extremely difficult. A lot of people, things start going sideways. They want to move to cash or they want to make some changes to the portfolio. It's just what's most important though is staying invested. What people don't realize is although we're seeing in bits of volatility, drastic moves down in the market, you're also getting drastic moves up in the market. So Fidelity put out some research that kind of showed what would happen if you went all cash and you missed out on these best days of investing in the stock market, because 7 of the best stock market investing days have happened during significant bouts of volatility. So what happens if you miss those 5 days? Your portfolio value is going to be about 30% less than it would have been had you just stayed invested. What happens if you missed 50 of the best investing days? Well, your portfolio value would have been about 91% less than what it would have been had you just stayed invested.
Easier said than done, because the logical side always makes sense, but the emotional side can take over. Talk for a minute about, there are times where you're coming out of a correction or out of the very point in time where things feel most risky or most unsafe for people actually can yield the greatest returns over the next couple of years.
Yes, if you look at returns after these extreme bits of volatility, and kind of examine what happened. For example, let's look at the 5-year return. After the Great Depression, if you stayed invested, 5 years later, you would have generated a portfolio return of over 300%. You look at the 08, 09 collapse. What happens if you stay invested? Well, 5 years later, you would have been up almost 200% just staying invested. So even when times look darkest, I know it's hard to stay invested, but it is the right decision there.
Well, Robbie, we appreciate your work on this front. At Legacy Financial, we do our best to try to mirror the emotional with the logical and make sure we're making sound investment decisions. And market volatility is a big part of that discussion. So thank you for listening today.